I'm Nate Lind, and I help people interested in buying or selling online businesses get the transaction done without the deal falling apart. If you're looking to buy or sell online businesses, then be sure to keep tuning in for more videos like this one. Be sure to subscribe and hit the bell for notifications about new videos and interviews. And introduce yourself in the comments. Are you a buyer or a seller? Enjoy the interview. Hey everybody, Nate Lind here, and one of the most common questions I get is, Nate, how can I make my business more valuable? How can I make it worth more money? And this video is for you if you're thinking about selling. It's also for you if you're thinking about buying, because these principles apply whether or not you're buying a business and you want to increase the value of it, or if you're selling your business and you want to increase the value of it. And I have with me a new acquaintance, Tom Bronson. Tom's also here in the Dallas-Fort Worth area. Tom, why don't you say hi and introduce yourself?
So I'm principal of Mastery Partners. We are a firm that is dedicated to helping business owners grow long-term sustainable value in their business, and to define their ultimate exit strategy. Because so many business owners don't really give a lot of thought to what their exit looks like, and therefore they don't prepare for it, and therefore the success rate is very low out in the open market. Of course, if you partner with Nate over here at Website Closers, you've got a much higher chance of finding a buyer when the time is right. But we're not a broker. We're not an investment banker. All we do is focus on the fundamentals and help business owners improve the long-term value of their business so that they can get that big exit that they dream of someday.
I know you've had multiple exits yourself. We're going to take and dissect that a little bit. We're going to focus on some key things I think that apply to my audience, who are mostly e-commerce entrepreneurs, digital age businesses, so digital media companies, internet companies, SaaS companies, technology-based companies, or the ecosystem around it, the business-to-business services supporting those. And so I put together, some of the points that I saw through some of your other content. And I'd love to jump into this. And the first one I saw, and this is near and dear to me, is requiring monthly financial statements by the 15th. Tom, why don't you tell us about how important that is? And I'll also share my perspective.
Yeah. Oh my goodness. So many entrepreneurs, so many small businesses kind of managed by the checkbook. I have money in the account, so things must be okay. But the reality is that you've got to have a disciplined way to look at and examine your financial statements on a routine basis. I engage with business owners who've had businesses for years, dozens of years, sometimes, or just a few years, where I say, how frequently do you require and do you review your financial statements? And they say, oh yeah, we look at them at the end of the year when we send it off to the CPA to do our taxes. Look, a financial statement is nothing more than a history book, right? It tells you the history. It doesn't predict the future. All it does is tells you what you did. But the thing is that if you don't examine that quickly after the close of every month, then you can't make changes in your business in order to improve next month's outcome. So we tell our business owners that you really should require the financials by the 15th and look at them in detail. And that might sound like, oh gosh, how can I do that by the 15th, especially if you have a large and complex business with multiple revenue streams. But the reality is that in my last company that I sold, which actually did some e-com stuff, you might be interested to know that, Nate. But we had a very large and complex middle market business. We got our financial statements by the 8th. So our chief financial officer was producing the statements, at least a draft, by the 5th. Our GMs could take a look at it, make their adjustments, and we were producing financials by the 8th. Why? Because if I get the financial on the 8th and something isn't right, then I can make adjustments in the business very quickly so that I can change the outcome for the upcoming month. If I don't look at my financial statements, I can't really make changes in my business that are going to impact the long-term goals that I have for the business. So get the financial statements. If you don't know how to read them, get with a CPA or get with an accounting person and learn how to understand what is on your financial statements, because you're going to need them when it's time to transition your business, and they need to be crystal clear, and you need to understand your profitability. So I'm just a huge fan of getting those financial statements very early in the month.
I couldn't agree more. Some examples of clients of mine that I've helped this year. I am a huge fan that if you're doing it yourself, You outsource it, get somebody to handle it. Entrepreneurs, you need to be focusing on the sales. You need to be focusing on the revenue creation. You're focusing on the overall strategy. Don't do it yourself, and don't be afraid of hiring somebody else to do it for you. It's not terribly expensive. There's a couple of examples, and if you need help, please reach out to me. You can email me. My information is in the description below. I can give you some great suggestions, whether you're an e-commerce entrepreneur. I have some really good referrals for folks that specialize in Amazon-based businesses and doing their books. For off Amazon-based businesses, there's no excuse to not be doing this. One example I've got, company, six-figure company, in the process of selling. We didn't have financials, and I agreed to take the listing on. I thought that we could work on it through the process. And I found out later that the seller's reluctance to do it was he just didn't understand how widely available a bookkeeper and a CPA and the affordability of it. Like, he had in his mind that it was going to cost him thousands and thousands of dollars, and it's absolutely not the case. And we couldn't get it closed. Like, we literally had to put it on pause. We're working on the financials. They're going to have to go and do all that back work. It's absolutely necessary to the transaction. You could almost not sell a business without monthly P&Ls, monthly balance statements, past year's end of year P&L and balance statement. It's absolutely critical. Tom, I see you're chomping at the bit.
Yeah, good Lord. Yeah, there are so many businesses that don't do financials, and it's too easy today, right? And you can get a subscription to QuickBooks online for $50 a month or whatever, or you can outsource. There's a lot of e-commerce players now. I get pings every day from outsourced bookkeepers who do this all electronically. And you give the information to them, and they can produce financial statements. But if you don't have a solid financial statement that people can understand, that a buyer can understand, then you don't have a business, right? Even though you do have a business, you got revenue, a buyer has to be able to understand those things. So for the love of everything holy, you do something, whether it's QuickBooks or outsourcing to a bookkeeper. My own story, when I started Mastery Partners, this, by the way, this is my 101st business. I have bought or sold 100 businesses in my career. And so when I started this, I knew I needed to do the financial statements, but I was reluctant because I was a solo entrepreneur at first. Now we've got partners in the business. And I really drug my feet, didn't do it. And 6 or 8 months later, I'm coming to the end of my first year. And I'm going, crap, I got to do the financial statements. And so I ordered my QuickBooks online, and I realized, oh my gosh, I can actually hook my bank account to this. I can hook my credit cards to this, and all my expenses, all of my revenue just flowed right in. And a few click of the buttons later, I got a financial statement. And so now I understand how to read financials, and so it's very easy. But for you might want to outsource that. And there are tons and tons and tons of suppliers out there that do business just like you do online. And so go look for one. You can get them very inexpensively.
Yep. So for this client in particular, it's a 6-figure business, very, very affordable bookkeeping. I literally found somebody on Fiverr with like 500 5-star reviews. They charge $100 a month to handle, I think it's like 250 transactions. Literally no excuse. That resource was willing to go back as far as 2 years, I think, like up to like 2,000 transactions, and reconcile 2 years worth of bank statements for like $600. So, you get what you pay for sure. So there's going to be some cleanup and some overview and stuff. On the high side, I see, that sort of work costing like $2,000 to $5,000 sometimes as well. But somewhere in that $600, to $2,000 range, you can find somebody to do that if you just don't want to touch it. That is the first person that I outsource. Any new business venture that I'm involved in is my bookkeeper. Second person is the CPA. But it's absolutely critical. Getting those monthly financial statements by the 15th is also critical through the sales process, because every month the business is listed, I am re-updating and re-communicating that information to the buyer. If you're on the buy side, you're asking for that if a new month rolls by, once you have a business under contract as well, and you're in the LOI and the due diligence phase, you're checking those numbers every month. Is it going up? Are they going down? Is it staying steady? What's going on? So that piece was absolutely critical. I saw this was your number one on the other webinar that I was looking at, and absolutely understand why.
Well, and just to pile on this a little bit, I mean, we could talk about this for this entire webinar, but important components of a financial statement are the P&L and the balance sheet. You got to have a balance sheet. I was just looking at a business in the last couple of weeks where I said, "Send me your full financials," right? And we're looking at buying this business, and what I got was 3 years of P&Ls, profit and loss statements, or income statements. And I said, and this is a very asset heavy business. They've got heavy machinery and things like that. So it's not like an internet business. I said, send me your balance sheet. And they said, oh, we don't use a balance sheet. How can you not have a balance sheet? I mean, you use QuickBooks, for crying out loud. Just send me whatever comes out of QuickBooks. And it became very apparent that they're not tracking their assets. They don't know what they have. They're not properly relieving them. Financial statements are more important to being able to actually do a transaction than you realize. So please, if you don't learn anything else today, you can turn this video off after this. Go and get your financial statements in order and then update them every month. Make sure you're looking at them every month.
I'm going to pile on with this one too. It's just so important. When I was just talking with a friend, he's also a buy-side due diligence expert. And he made an analogy for me, or kind of explained the balance statement, how critical they are. And I never heard it phrased this way. But the balance statement is the foundation and the snapshot in time that you've got at any given point in time. So let's just talk about like January 1st of 2020 compared to February 1st of 2020. And the income statement is what's transpiring. It's the cash flow and the income, and the expenses between those 2 points in time. So when Tom, to your point, you have to have those balance statements, especially in e-commerce. And here's a critical component too. You need to have your inventory on your balance statement, and you need to show true units sold on your cost of goods on your income statement. If you buy $100,000 or $500,000 or $10 million worth of inventory in January, and that's all an expense in January, and you're not tying it to actual units that are sold between January and February, and then also into March, April, May, etc. So a buyer can see what is the actual P&L, what's the actual profit and loss on a month-to-month basis, then we are not going to be able to get you near as much money when we sell your business as if you were to put your inventory on your balance sheet under an asset, and then you transfer and make journal entries, transfer and move it over onto your P&L. Best if you do it under accrual.
Yeah, but it doesn't even have to be that hard. If you're actually purchasing, then it should flow straight into your balance sheet. If you're using your financials to purchase, it goes on your balance sheet, and it doesn't even have to be a manual process. Let's say you buy 1,000 of widgets, right? And the cost was $1 each. So you got 1,000 of those, and you sell those widgets for $10. So each time you sell one, a proper financial package, even something as simple as QuickBooks, when you sell one, it takes $1 off of the cost on the balance sheet and moves it over to cost of goods sold on the financial statement, showing that you made $9 profit. And so it can be automatic and simple and easy. We make this sound, I'm afraid we may have made it sound a little bit more complicated than it is, but it's not. It's super easy once you get it set up. It's just like anything else in your business. Once you do it a couple times, piece of cake. And so, but it's so important to have that all in order.
Absolutely. And they can get that information directly out of their shopping cart, or their 3PL company can send them a report, what exactly sold that month. And then you enter that into QuickBooks and boom, it just moves it right on over. The one that I saw next is, reviewing the gross and net profit per customer and SKU. Since we're kind of talking about the financials and stuff, I wanted to highlight this. Super, super important. I don't see too many companies doing it terribly well. Why don't you, talk about it, put your spin on it, and then let's dissect it.
Yeah, you've got to know where you're making your money. So let's say you've got a fairly complex e-commerce business and you're selling multiple different products and or services. You have to understand where you're actually making your money. Let's say that you've grown this business and now you've got a $10 million business, and $8 million of it are these products that you're selling, and $2 million are these services that you're selling. You have to be able to track where you're making your money. So if you sold $8 million worth of products and your cost on those products was $7 million, you made $1 million in $8 million in revenue. That's $1 million in gross profit. If, on the other hand, you're also selling services at $2 million, and 100% of that is gross profit, right? So your $2 million, you make $2 million. $8 million in revenue, you make $1 million. Which is your more profitable line, and where should you go? And so here's the thing: you can't make strategic decisions about where you move in your business if you don't understand where you make money, which goes right back to that financial statement, right? Understanding how you do that. And so you need to understand, if I'm selling these products, let's say that you've got an online store and you're selling 50 products, which ones are your most profitable products? Where do you make your money? It may not be the ones that have the highest margin. Let's say you bought this for $1 and you're selling it for 10. It may be the ones that you're buying for $5 and selling for $10. Why? Because you're selling a higher volume of those products. And so it's so important to be able to track that stuff, to know who your biggest customers are, how profitable they are, knowing how much money you're making on each one of your products, because then you can make decisions about, well, I'm not making enough money on this product. Let me give you a great example that's outside of the e-commerce world. I bought a company in Chicago. This would have been, gosh, in probably 1998. And it was a $33 million business, but it was losing $5 million a year. So we went in. First thing we did is I said, let me see a profitability analysis of every one of our products, and I want to see a profitability analysis of our customers. Our finance team kind of pulled their hair out to try and get to what the profitability was, but I needed a P&L by customer. Turns out that I had 5 customers that I was way underwater on, meaning that I was losing money every time I took them product. And so I made the very easy decision that I needed to go back and renegotiate those contracts with those customers. So I took that, armed with the data of how much money I was losing and how much money we were getting from them. I went to each one of those, they were very large hospitals, went to each one of those hospitals and I said, we're losing money on our deal. I recognize we negotiated this contract, but we're losing money on the deal and we can't do that. So we got 2 options. Either A, let's renegotiate to at least get me to a break even, so I'm not losing money bringing products to you, or B, I am perfectly happy for you to break the contract and move on to somebody else. 3 of those 5 customers went on to somewhere else. 2 of those customers allowed us to renegotiate the contract. We went from a $33 million business to a $28 million business. 33 million losing 5 million a year to a $28 million business making $1 million a year, just by cutting loose 3 customers where we were losing money. So that's why it's so important to be able to understand where you make your money, where your profit comes from, so that you can make strategic decisions about your business. I probably overhammered that for you. Sorry, Nate.
No, it's a really good case study. I've got a similar one. In the early days of e-commerce, 2012, 13, 14, for me in my career, I didn't have a SKU level reporting in the shopping cart that I was using. So I built one, and I was analyzing my customers by the dates that we acquired them. It was a subscription-based e-commerce business, so those customers had several months worth of recurring orders that they would have. And once I built that, it gave me tremendous insights to being able to understand, what was the profitable products to sell, what were the profitable demographics of my customers, and the customer personas to sell to. Was using affiliate networks as well, so I was measuring the performance of affiliates and through the affiliate networks. So there's a variety of different things that I was watching. And I sold it in 2016 to a shopping cart. It was a fantastic exit. And then my hard luck story is, after having spent all that time building that system, selling that system, continuing to use it, I failed to properly train my staff when I handed that off in 2017. And the members of my team that were watching over that were missing some of the key performance indicators that they needed to be watching. And it took me a little while to figure out, like, where's all the where's all the cash going? Like, why are we having these bad months all of a sudden? And it was super painful, super humbling to have spent all that time and effort building that, and my own team didn't know how to use it. And I failed to, I'm the leader, the buck stops here. I failed to transition and properly train them to the point by which we could still steer the ship in a profitable direction. And this report is also just kind of a seller and buyer hack. If you're a buyer, you're going to ask for this report. If you're a seller, you're going to be prepared to hand this report over when you have an LOI, because this is going to be critical to making sure the buyer can get comfort and reduce their risk around the profitable SKUs in your business, and that you as an entrepreneur on the sell side know what's driving the profit. Thanks for watching. If you liked this video, be sure to subscribe and tell me what you thought about it in the comments. Your comments encourage me to continue posting videos, and they give me ideas about what to post next. I read and reply to every single one. Also, if you own an online business and you're curious of how much it's worth, click the link below to get a free business valuation with a member of our team. Who knows? It may even be me you're talking to.